Good day, ladies and gents. How are we all doing? I hope we're all good. So on today's video, I'm just going to speak on a couple of things which I feel like as a trader, you need to know. So some of the things I'm going to speak of are your open price for the day, the session highs and lows, the 13 exponential moving average, order blocks, the famous four candlesticks, which include the doji, and liquidity sweep. So I'm just going to start off with doing multi-time frame analysis. And before we continue, if you haven't yet subscribed to this channel and this content is bringing value to you, please do hit the subscribe button. Also, let us know what you traded in the comment section. Today it's Monday, the 24th of Feb, 2025. So do let us know what you traded. Let us know the name of your strategy as well, if you don't mind. So without wasting much time, let's get into it. So as usual, we start with the daily time frame to check our bias. So just going to change the color here. So on the daily time frame, what you notice is without even um, getting confused by anything, these are period separators, right? So you know if you're on the daily and you've got your period separators, simply means this data in here is representing 1 month. So this is the month of Feb. This is where we opened. Price is sort of like continuing with this trend which has been going on, this downtrend which has been happening. So at a glance, that's what you see. So the second thing you'll notice is your price is trading below the 13 EMA for the past 1, 2, 3, 4 days after we got this nice close with a bearish engulfing. And on Friday, we got this nice stop hunt to the top, with price coming to tap off this low here as a resistance point and continuing to push down. So coming into the charts today, I was just looking forward for a possible continuation to the downside, which means I came to the charts already with a sell bias just based off what I was seeing here. So I had a sell bias coming off from the daily chart. So going to the 4 hour, what I noticed also after I came to the charts, because I actually checked these charts in the morning at London session, then we actually traded in the afternoon for the New York session. So what I noticed when I came to the charts is to the left hand side, after this rejection or this hit of this resistance point which we mentioned, we noticed that price actually broke an order block here. So H4 presented us with an OB, right? We had an order block on H4, number one. Number two, price was actually rejecting the 13 exponential moving average, which is a dynamic resistance point as well. So we had two confluences lining up here. Then if we took a glance on the TDI, you would have noticed that price is actually trading below the 50 static, but mainly just checking the yellow baseline. This was just like a point of reference. So again, H4 confirmed the possibilities of us actually getting sells based on this action, which was happening right here from the time the price opened today. So again, it's a new week. So if you're on the 4 hour, these period separators now represent 1 week. So this is 1 week of trading data, Monday to Friday, and this is today, this is Monday. So it's a fresh week. Then continuing with the multi-time frame analysis, if you jump to H1, right? So H1, that's where things start to get a little bit interesting because as a day trader, H1 has to be your best time frame. So looking at H1, actually right now, I'm now noticing another point of interest. Let me actually mark it for you. So with this push, which happened on Friday, price actually left this particular supply zone or order block right at the top here. So you just want to mark this area as a point of interest. But anyways, in the morning, price was actually bouncing off the 13 EMA on H4. So at London session, we actually, personally, I actually attempted to take a sell here because I had this nice price action right here, bouncing off Friday's open price. So as a trader, especially as a day trader, a an open price for the day usually has to be marked as a point of interest. Of course, these open prices will vary depending with the broker you use. So with this broker, the open price for Friday was this level, this was Thursday, this was Wednesday. So I just have an indicator which shows me these open prices. But if you don't have an indicator, or if you're on the mobile phone, you can just simply put a horizontal line there so that you can use it as a point of reference. So what I noticed is Asian session created this pin bar candle right on the open price of Friday, which was also near the 50 exponential moving average. So that sort of gave me a clue that a stop hunt here is done. So if you are to mark the high here, let's just confirm the exact price. So that's 18, let's just put 80, 189.580. Okay, just like that. So this was the high of the Asian session today, which is still the current high of the day. Of course, if price decides to push up, then this high will be violated. Then price will potentially maybe come into this particular point of interest, which we have at the top. But in the morning, this was my view. And when I saw this M pattern forming with this nice doji and price starting to expand downwards, especially after closing below the stating EMA, I then decided to actually take a short or a sell during London session. But I'll jump to trading view and I'll show you how it played out. Then in the afternoon, price took us out here. So in the afternoon, I realized, okay, my price came back again to the same open price from Friday. And I want you to realize that price was actually finding support of today's open price. So this is why the open price is important to me, or why the open price should be important to you as a day trader. Because if you market like this, you can just use it as a point of reference. So if you notice, all candles were closing above that open price, meaning that it was actually a solid support zone right there. So price took us out, came back up. So when I came now for New York session, I realized that, okay, price bounced off here, but here my setup was still valid. My higher time frame bias was still valid. So I had to just zoom in and see what exactly the H1 is giving me so that I can take a sell. Then, of course, if price had continued to expand to the top here and broken this high, then probably I would have looked for a possible buy trade coming back into this order block here. But what happened is I realized that price gave this doji, a variation of a doji candlestick pattern, and this doji had taken out the London session highs, but they failed to take out the Asian high. That's the first thing which caught my attention right here. So as soon as I saw the close of this candle, I was like, you know what, let's now jump to M15, because we're now in the heart of New York trading session. So when I jumped to M15, this is what M15 showed me. So remember, we've got our Asian high here, which was the high of the day. We've got Friday's open price here. So I realized that price actually came, took out the London highs, then gave this nice doji candle or pin bar or whatever you call it, either a doji or a pin bar, right on the 200 EMA as well. That right there was enough for me to be confident that we are actually going to get sales. And the other thing is, from this highest point, the next order block I had was this one here. So any break of this level would have actually confirmed my bias, and I was looking forward for a sell. And I would have been paying attention to this same level right here, which was the open price of today. So I wanted to also see them break this level so that it can just give me that confidence to keep holding my trade. And my TP was just aimed towards the day's lows. And I'm just going to now jump to trading view so that I can show you the setup. So let me just first come to M3 here before we switch to trading view. Okay, so M3, I'll just explain because I've removed my indicators on my trading view, but I'll just come back to show you my entry here based on our strategy. So jumping down to trading view, You can see this is already on M3. So let's just go back to M15 so that you can see how the price action was. So here you see my trading session boxes. This is the beginning of the London session. This is the beginning of the New York session. Then, if you know how we trade, you always know that I try to pay attention to the stock market open as well, which happens exactly 1 hour, 30 minutes after the New York session opens. So let's just quickly mark that stock market open. So it usually happens at 16:30. So this was the stock market open. It just came with this momentum here. So let's just scroll back. All right. So after I got this doji, like I mentioned on M15, if you look to my left, these were the London session highs, right? So this shows me that this is now a liquidity sweep here. We've got a liquidity sweep. Um, Soon as you see a liquidity sweep, you need to get any form of a market structure shift. So a liquidity sweep, if price is coming to the high, let's say you've got equal highs here, a liquidity sweep will look something like this. Price will just come above here, then immediately come back down. And usually they will throw a doji here or a pin bar. One of those two candles will just solidify that liquidity sweep. Then here there will be an order block which needs to be broken. Then price will sometimes retrace either into that order block or into any imbalance which would have been left here to become an inverted fair value gap, or into an imbalance which will be left in this particular market structure shift, which will just be retested, or a fair value gap which will just be retested for a confirmed sell. So this pattern, you can get it from M15, you can get it from M5, but personally for me as a day trader, as soon as I confirm my M15 like this, I usually just jump to M3. That's where I start looking for my market structure shift. So on the M3, you see that I had marked my London highs with this gray zone here. This was the New York open, and this was the liquidity sweep. That doji you see on M15, this was it right there. Then you can see from this high, this was the order block. So initially we had a break, but this whole move was actually the market structure shift I wanted to see. And from that market structure shift, you also notice that price actually left this particular imbalance here. Although I didn't mark it because I already knew what was happening. Sometimes I don't mark everything, but I'm just showing you guys what else was there. So we had that imbalance together with this zone, which was now a resistance area here. So price came back below, retested and dropped. Some might call this a breakout. Yes, it is a breakout, but the fact that it comes back below our point of interest, it then makes that breakout a fake out, depending with the terminologies you're using or the terminologies you understand. All these things just refer to the same thing. So price came back below that zone and we had a nice retest right there. So here I was now interested to enter here, and I had also marked this order block also based off this high. So we had this order block, we had this order block. So my alert was right here on this black line for a sell stop. So as soon as I got my alert, I actually got my alert to sell on on this break. You see this little candle here. If you notice, you see the alert already is sounded. I'm not sure if I can show you guys, but yeah, we had an alert here on this zone. So I was waiting for a break of this order block just to confirm my directional bias. So price gave me the alert. I came, started actively stoking. So I saw this candle start to turn black or bearish. Decided to take my sell in this area. My stop loss just went above this particular candle because it was the one which was or which I would call a variation of a pin bar, or it was the one which actually came and tapped into this broker zone and also tapped into this fair value gap as well. So I just put my stop loss above that area and I mapped out a 1:3. So my 1:3 trade was on this black line here, right here. It was something like this, but I had another point of interest to my left, which I was targeting. So I just extended my reward for this particular setup, excuse me, and I entered this trade. So the stock market then opened with this candle here, 16:30, 1 hour, 30 minutes after the New York session opens. So price actually came with a little bit of an aggressive push up. So sometimes you just have to wait. Don't put your stop loss on break even immediately. Just wait, especially if you know that 16:30 hasn't opened and you are already in the trade. This equity market open will bring two things into your trade. They will either bring another stop hunt, which means sometimes they will actually push price way up here, sometimes even to take out this high as well, which will be another liquidity sweep before a fresh pattern opens. Or they'll do the second thing, which is to just give momentum into the price order, excuse me, into the price order flow, which is already going on, and price will just accelerate towards your TP, which is exactly what happened with this particular setup. So we ended up coming out with the 1:4, all depending with how you executed your setup. But this was our GJ trade for the day. So our trade setup started from the daily, getting our buyers, confirming with the 4 hour, getting our order block, going to the H1, confirming with the doji, and the liquidity sweep. Same applies to M15, which gave us the liquidity sweep. And I just wanted to highlight also, you just need to make sure that if you're a day trader, you want to mark your session highs and session lows. So when your day starts and you come to the charts, you want to mark the Asian session high as a point of interest. You want to mark the London highs as a point of interest. You also want to mark the London lows as a point of interest. And you also want to mark the Asian lows as a point of interest. Then this red line you see on the bottom, this was Friday's lows, which is also a point of interest. The reason we mark these areas is because, as you've seen here, the London highs were used as a liquidity sweep, and the London lows were used as a take profit target. So it sort of just gives you a clue of how to manage your trade once it's running. So if our price had come back above here immediately, then we could have potentially started to look for a potential long, and the order flow might have been changing if price had done that. But the fact that we came below and we already understood what price was doing, this was also a nice potential TP area, and we could also have taken profit on this area as well. So again, if you're trading using a strategy, you know when your price moves halfway towards your target, you take a trade, you take some of your trade off at this point, and you move your stop loss to break even, so that your trade, if price decides for some reason to turn back here, it does not take you out. So in the morning, I mentioned I was taking a sell. So let me quickly show you. So in the morning, we had this push up, we had this imbalance. So after I saw this at London Open, you can see this was London Open. This is where I decided to actually take my sell. So price broke here, I got this nice pin bar, and I was in this trade right here. So price actually pushed towards my target. I think I was targeting these lows. Then within a few minutes, a couple of minutes, price actually turned back and actually took me out. So I didn't chase price. Even when I entered the trade, I actually left it. I didn't really focus on it that much. So this allowed me not to be emotional. So that's another note you need to take. This allowed me not to be emotional, because sometimes if you're watching price play out and you see it take you out, let's say for example here, then you see this pin bar, maybe your bias might change. You decide to take a buy here, then price turns back again, takes you out here, starts to push back again. So going away from your charts and letting your trade run, like, it eliminates the emotions which come with this price action which was happening here. So I did a good thing. I left the charts in the morning. Then when I came for New York, which is my normal trading time, I managed to find a nice setup, and we managed to take a nice win on GJ. So I think that's it for today. If you found value in this lesson, or if you learned something from this lesson, please comment in the comment section below what you learned. If you trade in a different way, or if you use different terminologies for some of the things I mentioned, also just state them in the comment section. Let's hear how you trade. So for those who say seeing is believing, some say um, They want to see the results. So again, this is our 2025 day trading course. If you need it, just get in touch with us. I'll drop the link in the description. You can just go straight to the WhatsApp community. Then you can DM the admin, which will be me, and you can just request this course here and I'll send it to you. Or if you just want mentorship, you can just let me know as well. So let's check our daily results quickly. Feb 24th. Okay, there we go. Feb 24th. So I'm just going to show you, this was the actual setup here. Let's just zoom in a bit. You can see this was the setup when it first popped up. And this is the time I shared it with the community as well. And I think it was just before, this was just before 1630, right? This was just before 1630 because that 1630 candle came up, then price actually then pushed down. This was the 1:3, this was the 1:4. So the setup was initially looking like this. And I'm just going to quickly show you the notes as well. Okay, I hope there's no.
It's gonna happen. God, I look forward.
Okay.
I look forward.
Let's just zoom. Mute that. Okay, so let me just play it from the beginning. So you can see in my community group, I try to share all the information which I have on the particular trade, just in greater detail so that people understand. So you can see GJ. This was 1628. It was 2 minutes before the equities market open. So we mentioned equities open in 3 minutes. Will either that equity open will either bring a stop hunt or a stop out to the current trade we have, or it will bring an expansion of price to our intended direction. So these are just notes. So if you plan your trade, it sort of helps you to manage it once it starts to run, or once you see whatever will be happening with price, it sort of helps you to plan your trade out. So after that, let's clear this. Okay, this was the setup. I think you see this was the trade running. So when you have a narrative behind the setup, it becomes a little more simpler to understand. Of course, it's not easy because when your trade is running, there's a lot of emotions which go on through your mind. So that's normal for a day trade. I'm sure you guys will agree. So it just makes it a little bit easier if you have a narrative or story behind your setup. And not easy, but it just makes it simple. Then you can see 1:3 was on the black line. It was already hit. Like it didn't really take long for that 1:3 to be hit. And this was just me pointing out the entry and our reasoning to the entry there. Then you see the running trade just now. So you can see the entry there. This is a proper count as well. So you can see TP for the proper count, I let it run a little bit. So those who are in the community group actually saw it run. I think we closed it right below there. So this was the trade, and I think we had another quick setup on Nasdaq, although I didn't show it on this particular video. But you can see it's just the same narrative. We had a liquidity sweep right here with this push up. Then this was the order block which had to be broken for us to confirm that we're actually coming down. And a break of the order block also brought in this market structure shift. And after a market structure shift, you just want to get a retracement into the 13 exponential moving average. Once you get that retracement, then you are looking for the famous four. Either you get a pin bar, either you get a doji, either you get a bearish engulfing, or you get an inside bar. If you get any of those four candles on your point of interest, that's your sign to enter. So here I had one runner. Then after this confirmed, I had a sell stop just below this low. And this was the TP at the bottom here. So I think we ended up catching what? Almost 150 points, if I'm not mistaken, plus or minus 150 points on Nasdaq. And that was our second trade for the day. So I hope you guys learned something. If you did, please let me know what you learned in the comment section. If you trade a different way, please let us know how you trade and how you would have attempted this particular trade. If you don't trade GJ at all, I also don't trade this, but I saw out of my whole watch list for the day, only GJ showed me something familiar. So as much as I trade all these things you see below here, I try to pick one which is show me something which is familiar. Then I just run with that particular trade. So I did not even check the rest of these particular items. And yeah, I think that's it for today. Without wasting much time, guys, this is it for today. What are we expecting now? Potentially, maybe price might come here. We might get another liquidity sweep here. Price might come down. But all this now will be determined um, by the daily close. So I still want to see how the daily candle closes. We might still get price come retest the 13 EMA. We might still get price come towards these lows, but we might also see price close above the 13 EMA and come back towards this uh D1 order block. So these are just all possible scenarios, but the better picture will form after today's daily candle is closed. So I hope you guys managed to pick something out of this video. If you don't understand these candles, or if you haven't watched the famous 4 candlesticks yet, I'm just going to throw a video right on this corner here. I'm just going to throw a video for you guys, then you can watch it. Then if you just want to understand how candlesticks move, I'll just recommend you to watch or read rather the Candlestick Trading Bible, or just watch this video, which I'm going to throw on the right-hand side. It's just like a series of the Candlestick Trading Bible, which I went through and I just recorded with chart examples. So I hope today's session was productive. Please hit a like if you still haven't subscribed, and if this lesson or video was helpful to you, please do me a favor, hit the subscribe button, share your comments, tell me what you think about the way I trade, share the videos if you feel like sharing, if you've got trader friends, and also let me know, are you a day trader? Are you a swing trader? What type of trader are you? Enjoy the rest of your day. Good trading.